Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So today we're going to talk about the frac spread count, how things have changed. Are they going to continue to change for the better, for the worse? How is Saudi Arabia and Russia and the fact that they're going to extend those cuts through the end of the year, how is that going to impact things? And realistically, what are they doing? What boats are moving? What are their exports doing on the crude side, refined product side? And we really want to look at how have those changed, or will they change going forward? So just jumping right in here, you can see that we had an increase of 8, and realistically, I think we've now seen the bottom. We're going to continue to see the ramp up. We had some additions in the Permian. We had some small additions in Appalachia. We had some in Western Gulf, and I think realistically at this point in time, you're going to see the Permian start to ramp up a bit, as well as the Western Gulf, but not a huge amount. And I think this is something that we've been talking about a lot. We've reached that perfect, if you will, industrial mode where you're running rigs, you're running completion crews. We don't need the same amount of DUCs, but we're still going to have some decent production. And by decent production, I mean we're never going to 19 million barrels a day, at least under the current technology we have, the current infrastructure that we have. There's really no need to get to that point where here you can see that there's that kind of steady move up. And it's not that we're going to explode back up to 285 spreads. It's going to be a walk up, but realistically, the Permian should see a little bit more activity as we progress through the remainder of September and October. And then we'll have that normal slowdown that comes through as we get into the end of November and then into December. So when you look at the rigs, the oil had an increase of 1, gas had a decrease of 1. But it's important to look at that shift. Horizontal rigs are still dropping. We had a drop of 4, directional increase by 5, but the horizontal, as we've been saying, is the really important one to watch, and it continued to drop. Now, it obviously wasn't across the board. New Mexico and North Dakota dropped, Texas went up. So here you have just that pivot for that push. So now you're going to see New Mexico slow down a bit. You're going to have Texas ramp up. And one of the things that we've talked about before is E&Ps are going to get more specific now on where are they drilling, because if you don't really want a huge amount of liquids at the moment, condensate, natural gas liquids are not going to give you what you're really targeting. And with that reduction of the extension of the cuts from Saudi Arabia of 1 million barrels a day through the end of the year, 200,000 barrels a day through the end of the year from Russia, there's a lot of demand for U.S. product and U.S. crude, but not as much for condensate. And in NGLs, there's demand, but you're not getting a lot of pricing. So here, given where light crude is, where WTI is, you're going to try to create the heaviest barrel possible, or as close to that grade as possible, to take advantage of that market. Because with what Saudi Arabia did, again, it's going to increase demand for U.S. crude going into Europe. It's going to support us going into Asia. And that's going to be a big driver of a lot of this activity as we go into year end. And realistically, depending on how things progress with that cut into next year. Now, it's important to look at where our flows are. So here you can see that China continues to produce export a sizable amount. They did get a new export quota. It's about 7% higher than last year. But it's interesting because there's more talk that there could be a fourth one. And that's interesting because when you look at the flows, I mean, there's a huge amount of exports. We've been saying that demand internally still remains sluggish. That remains the case. We'll talk more about that tomorrow. But India and China are exporting product because, well, why wouldn't you? The ARB is there. Might as well try to capture that, as we've seen some slower builds. If you look at Singapore, if you look at Fujairah, we've had some drawdowns on crude storage, but some of that onshore storage has come down, but the offshore storage has come down, but it's moved into transit. So again, there's that timing delay of moving out of floating storage into transit. And when you look at the activity that China's done, China's been slowing down some of their purchasing. So, given where some of these things are, there are some growing assumptions that with the export quota, with where things are, you could see a little bit of a slowdown of Chinese refiners, which again would weigh on some of that underlying production growth in the world and that demand, because you wouldn't have China buying the same amount. Now, here's an interesting piece when, obviously Saudi has cut, and we'll show you Saudi's crude flows, but they're exporting a lot of product. UAE is exporting a lot of product. So they're taking advantage of this opportunity because the middle distillate barrel is still fantastic. So you might as well export that product. Why export oil when I can export product? And here's where they're taking advantage of that. Now, Russia is continuing to export at a higher level, but they're coming into turnaround season. They're going to have to, so that this will bleed a bit lower. The question is going to be timing, because one of our followers that has been always a big supporter, and we'll talk more about this in the EIA show, the question was, well, there's actually diesel problems in Russia. And it's, well, for them, the war effort is always going to consume a lot of diesel. I mean, we've seen that in any war effort. When you look at tanks, when you look at heavy machinery, it runs off of diesel. Then on the other side, they're trying to export diesel to again, then push money into it. So what does that do? That they take that diesel from their populace to then filter it down into these levels. And that's something that is going to become even tighter as we get these turnarounds and these underlying slowdowns. Now, when we look at crude flows, one of the things that we've been saying is that this is a perfect storm for Iraq, because right now they can raise OSPs, still be cheaper than Saudi, and essentially export every barrel they can, because people are going to look for the cheapest barrel, and Iraq is cheaper than Saudi, and it has a similar cut when you look at that medium heavy, so it makes offers up a lot of opportunity. Then when you look at the UAE, they're bouncing around a bit, but we should see the UAE also bleed a bit higher as they take advantage of this situation. Russia, as you can see here, is kind of holding steady. We expect that to be the case and move a little bit higher, just because they are bringing about 300,000 barrels a day back, because it was 500. They've agreed to 200. So again, these are some things that we want to look at. And then next week, and in our insights that come out today, we're going to talk about how this impacts into China. What are some of these shifts? And we'll go into more detail, especially as we go through not only just the energy side, but also the macroeconomic impact. Because these shifts, these moves aren't exactly very good for inflation. Brent, if you look at the range, Brent futures move into that 88 to 96. We don't think it gets to 96, 92 to 94. There's a decent amount of resistance there. But again, they're going to push it up into that region. Now, we've seen some slowdowns in the physical market. This could be just timing delays, people trying to adjust to what just happened. But these are going to be important things to watch, especially when we look at West Africa, because Angola is going to be a very good kind of bellwether of, well, how strong is China? Because euros are now expensive, so you're not getting the same discount. And this is going to be something that we want to explore more next week. Well, we hope you have had a great week. We hope you have a great weekend. I was traveling a lot, so I will be back in the saddle next week, and we'll have our normal schedule. So we hope you enjoy the rest of your week. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.